Welcome to the deep dive. Today, we're plunging into Bitcoin. And not just another market cycle story. We're talking about a massive, really fundamental structural transformation happening right now. It's changing how Bitcoin's seen, how it's regulated, how it fits into the whole global economy. Our mission today is really to cut through all that noise. We want to pull out the crucial insights from everything that's been happening recently, give you a shortcut sort of to understanding how Bitcoin's evolving, from what was, let's be honest, largely a speculative thing into something becoming much more integrated into global finance, into technology. It's not just about the price swings anymore.
Exactly. It's about a whole new phase of market maturation. And what makes this deep dive, I think, so important right now is we're connecting these dots, these news items that might seem separate.
Right.
But they actually form a really cohesive narrative. We want to show why these moments are so pivotal for digital assets and, crucially, what it actually means for you. You see Bitcoin kind of consolidating around, $111,000 lately?
Yeah, it's been pretty quiet.
Well, that calm. We think it's really the calm before a pretty significant storm of structural change.
Okay, so to really get into this evolution, we probably have to start with regulation, right? What many are calling the regulatory green light. This landmark U.S. guidance feels like it's reshaping the whole landscape for digital assets. It's a joint thing, isn't it? From the SEC and the CFTC, the big two.
It really is a tectonic shift, as you said.
Yeah.
It's monumental. This joint statement, it clarifies that registered U.S. exchanges think the NYSE, NASDAQ, CME group, they're explicitly not prohibited from listing and trading spot crypto products.
Not prohibited. Okay.
Exactly. For years, the lack of clear guidance, it basically created this regulatory moat, you could call it. It effectively stopped these big traditional venues from even thinking about offering spot crypto. This applies across the board to exchanges regulated by both the SEC and the CFTC.
Okay, so if I'm getting this right, this sounds like the end, or at least the beginning of the end, of that long turf war between the SEC and CFTC over who controls crypto.
Yeah.
That fight, that ambiguity, it's been a huge barrier for institutions, hasn't it? They hate uncertainty.
Absolutely. Huge apprehension. It's like they finally decided, okay, let's figure this out together.
So what are the ripple effects beyond just, clearing the path?
Well, precisely. This unified front, it dramatically de-risks things. From an operational standpoint, compliance, it removes this massive question mark for the big players. And then you can start imagining this potential liquidity supercycle.
Okay.
Because these traditional exchanges, that's where the trillions already are, right?
Deep pockets.
They're deeply wired into the major banks, the asset managers.
Yeah.
So Bitcoin could potentially just plug right into the world's deepest capital pools. Think tighter bid-ask spreads, less slippage on big orders. It's a fundamental change in the U.S. regulatory attitude.
Yeah.
From unclear, often kind of confrontational, to collaborative, explicit guidance. That's huge.
That kind of clarity is incredibly powerful, no doubt. But what's really interesting is how fast the institutional money seems to be already moving, even with this just emerging. Let's look at the flows. Get this. Past 24 hours, spot Bitcoin ETFs, a staggering $333 million in net inflows.
Yeah, it's a big number. And it's a sharp contrast to Ethereum. In that same time frame, Ethereum-based funds saw about $135 million in net redemptions. Outflows.
Wow, okay. So a reversal from August?
Exactly. A real flight to quality dynamic playing out.
Yeah.
August favored Ether ETFs. Now it's flipping back hard to Bitcoin. And this isn't just like market noise. It feels strategic. Institutions are really cementing Bitcoin's role as that digital gold, the reserve asset, secure foundational.
Okay.
While Ethereum is maybe seen more as the engine, the platform for innovation for things like DeFi, decentralized finance and dApps, more the software layer.
And it's not just the ETFs, is it? We're seeing corporate treasuries getting involved in a big way, too. Strategy, for instance, just picked up another, 4,000 Bitcoin, roughly $449 million.
And look at Japan's MetaPlanet. They just crossed 20,000 Bitcoin total. Added another 1,000 BTC, about $112 million worth.
These aren't trivial amounts. It suggests this is becoming, almost normal practice.
I think that's exactly it. It suggests holding Bitcoin on the corporate balance sheet is maturing. It's becoming a standardized practice, recognized across different countries, different jurisdictions. It's moving beyond being some edgy novel trend into a legitimate treasury management strategy.
Which provides a more stable demand floor, right? less speculative.
Precisely. When you see public companies consistently buying, it signals deeper confidence.
Yeah.
It creates a more predictable market base, less driven purely by retail hype or short-term bets.
Okay, so we've got regulatory clarity, pulling in institutional cash, reshaping the foundations. How is the price actually reacting day to day? It's been pretty tight, consolidating around $111,000, found good support near $108,000. Resistance up around $111,500 and $112,000. It feels calm on the surface.
It does. But, the derivatives market, that often tells a different story. It whispers secrets before the spot market shouts them.
Okay.
And is painting a more nuanced picture right now. Open interest on perpetual futures, those are the ones that don't expire.
Right.
It's up 2.35% to $30 billion in just 2 days. That means new money's coming in. We're also seeing bullish call options stacking up. $120K, $130K, even $140,000 strikes for the September 26 expiry. People are betting on upside.
But there's always a but, isn't there?
There is. Here's the twist. A key options metric, the 1-week 25 delta skew. It jumped sharply.
Okay, delta skew. Break that down for us.
Basically, it measures the demand or the price for bearish put options versus bullish call options. And this jump means there's suddenly strong demand for downside protection. Traders are paying up to hedge against a potential drop, even while they might hold those bullish bets.
So for you listening, what's the takeaway? Sounds like the market is kind of coiling up like a spring, waiting for these big macro events, Friday's U.S. jobs report, the Fed meeting.
That's exactly it.
Positioning for a big move, but maybe not sure which way. Hedging bets.
Precisely. Implied volatility is actually low, which suggests the market doesn't expect huge swings before the news hits. But that combination, rising bullish calls and rising demand for bearish puts, shows traders are bracing for a sharp move after the news drops, one way or the other.
Interesting.
And what's also important here is the on-chain data. You look at the cost basis, the price where people bought their Bitcoin, there's a dense cluster right around these current price levels. That suggests really strong support from buyers who are in it for the long haul, high conviction buyers.
So sell-offs might get bought up quickly, more cushioned?
Potentially, yes. That these holders are less likely to panic sell on smaller dips.
Okay, let's shift gears a bit. Let's talk about how the big traditional finance players, Wall Street, aren't just watching anymore. They're actively building the infrastructure.
Yeah.
This isn't theoretical stuff. It's happening now, blurring the lines between old finance and new.
It really is. Take BNY Mellon and Goldman Sachs. Huge names. They've launched the first tokenized money market funds. They're using Goldman's own digital asset platform, GSDAP, and BNY Mellon's liquidity direct system.
Tokenized money market funds. What does that actually unlock?
It's transformative. Think about traditional money markets. They're huge, like $7 trillion. But your investment is kind of static. If you want to use it as collateral, you're waiting 2 + 2 days for settlement.
Right. The old system. Slow.
Tokenization changes all that. It allows for instant 247 transfers. Your static investment becomes real-time collateral. Matthew McDermott at Goldman put it really clearly. He said instead of selling fund shares to get cash, investors can just transfer the digital tokens directly, instantly.
Wow.
It's not just making things faster. It's a fundamental rethink of capital velocity. It could unlock billions in capital that was previously tied up, making the whole system way more dynamic.
That's a massive shift in how liquidity can move.
Okay.
And then there's JP Morgan. They just committed, $500 million to Numerai, that decentralized AI hedge fund. This feels different than just buying Bitcoin. It's like investing in the underlying tech, the crypto mechanisms.
It absolutely is. This isn't about holding the asset. It's an investment in crypto-native financial models, blockchain-based incentives. It's the software layer of this new ecosystem.
How does Numerai even work?
Well, it's fascinating. They crowdsource machine learning models from data scientists globally. These scientists stake Numerai's own crypto token, NMR, to show confidence in their predictive models. If their predictions are good, they earn more NMR. If they're bad, their staked tokens get burned, basically destroyed.
Okay, skin in the game.
Exactly. So JP Morgan putting $500 million into that. That's a massive validation of a very complex, very crypto-native strategy.
And the market reacted.
Oh, yeah. NMR's price jumped, I think, as much as 41% after that news broke. Huge reaction.
And speaking of bridging gaps, Coinbase is doing something interesting too, right? With this Mag 7 Plus Crypto Index future.
Yeah, the Mag 7 Plus Crypto Equity Index futures. It bundles top tech stocks, NVIDIA, the usual suspects, plus Coinbase's own stock, Coin9, and crucially, shares of BlackRock's spot Bitcoin and Ethereum ETFs.
So it's like packaging crypto exposure with familiar tech growth stocks.
Exactly. And what's really smart about this is how it lowers the barriers for traditional portfolio managers, psychologically and operationally.
How so?
By wrapping digital assets into a format, they already understand a growth-oriented index future, alongside stocks they already hold. Coinbase makes it much easier to get crypto exposure. It positions crypto not as some weird separate asset class, but as a natural part of a modern investment strategy. Makes it way more accessible.
Okay, that makes sense. Now, away from the trading desks and Wall Street, let's talk about Bitcoin mining, the actual foundation. There's a really interesting pivot happening there too, isn't there? Miners facing tighter margins after the halving, and now strategically shifting towards AI, using their infrastructure for something else.
It's a really clever, almost essential evolution for them. Look at Galaxy Digital. That's a prime example. They just got a $1.4 billion debt facility. And what are they doing with it? Converting their huge Helios Bitcoin mining site in Texas into a dedicated AI data center for a company called CoreWeave.
$1 billion to switch from mining Bitcoin to powering AI.
Yeah, it's a 15-year deal. And they expect it to generate over $1 billion in annual revenue for Galaxy once it's fully up and running.
Wow, that must really change their business model.
Dramatically. It de-risks the whole thing. Mining revenue is volatile, tied to Bitcoin's price, difficulty adjustments. This AI hosting provides stable, predictable cash flow, largely uncorrelated to crypto market swings.
And JP Morgan put out a report highlighting this trend, right? Affecting miner valuations.
They did. They noted the total market cap of 13 U.S.-listed Bitcoin miners hit a record $39 billion in August. And a big driver was exactly this AI convergence narrative.
So investors are seeing them differently now.
That's right. The market is re-rating these companies. They're not just valuing them as volatile mining operations anymore. They're looking at them more like data center REITs, real estate investment trusts, or specialized AI infrastructure firms, applying much higher valuation multiples.
Because the core assets are the same. Cheap power, data center know-how.
Exactly. Those assets are fungible. They can be used for whatever computation is most profitable, whether it's mining Bitcoin or training AI models. And you're also seeing consolidation, like Griffin Digital Mining merging with American Bitcoin. They'll trade under ABTC. It shows the industry is maturing, professionalizing, scaling up.
Okay, let's widen the lens again. Go global. Because this corporate treasury adoption isn't just a U.S. thing, is it? We saw Mingxing Group Holdings in Hong Kong, they're NASDAQ-listed, a construction company, buying 4,250 Bitcoin for about $483 million.
Yeah, and that deal is pretty sophisticated. It wasn't just a cash purchase. It was financed using convertible promissory notes and stock warrants.
Okay, what does that mean in simple terms?
It means they're basically using specialized debt that can be converted into Mingxing stock later on. It lets the construction company get that big Bitcoin exposure now without burning through its cash reserves.
Ah, clever.
And the seller gets the potential upside if Mingxing's stock does well. So connecting this back, it shows the corporate treasury idea is maturing globally. Companies are using more complex, capital-efficient ways to get Bitcoin onto their balance sheets, not just simple buys anymore.
It's not all sophisticated financial engineering in crypto, is it? There's still the wild side. We saw that very volatile launch of the WLFI token. World Liberty Financial saw $1 billion traded in the first hour, then tanked pretty hard on day one.
Indeed. Dropped from over 30 cents to around 20 cents pretty quickly. And that event really does highlight that dual nature of crypto we talked about.
Yeah.
You've got one part meticulously integrating with Wall Street regulated ETFs, strategic corporate buys, tokenized funds.
Right, the grown-up part.
And then you still have this other side, still very much a Wild West, high risk, driven by hype, speculation.
So for you listening, the key is
understanding the difference, knowing what's driving value long-term versus what's just short-term noise or speculation.
Yeah.
It's a crucial distinction to make in this space now more than ever.
Okay, let's wrap up by looking at the absolute bedrock, the fundamentals, beyond the markets, beyond the institutions. What about the Bitcoin network itself? Amidst all this noise, the Bitcoin hash rate, it actually hit a new all-time high recently.
Yeah, and that raises a really important question. What does that rising hash rate actually signify?
Good question. Security.
Unprecedented security for the network, yes. But also, it means miners finding it profitable, even after the halving cut their rewards.
Okay.
And maybe most importantly, it signals deep underlying confidence in Bitcoin's future price among people literally investing billions in the hardware to secure the network. That hash rate, it's the foundation. It's what gives institutions the confidence to build on top of it. It's that quantifiable proof of the network's integrity and resilience.
And it's not just the network security. Grassroots adoption is also surging, right? According to Chainalysis.
Yeah, their 2025 Global Crypto Adoption Index shows huge growth. Asia Pacific up something like 69% year over year. North America up 49%.
So it's not just the suits.
Not at all.
Yeah.
This reveals that powerful, dual-sided demand structure we mentioned earlier. You've got the institutional capital coming in from developed markets, combined with this utility-driven grassroots demand from emerging markets, people using it for remittances, payments, hedging against inflation.
Creates a much stronger base.
Exactly. A more resilient, more diversified global demand for Bitcoin than ever before. And interestingly, we're even seeing the corporate treasury idea branch out beyond Bitcoin now. CEA Industries added BNB, the Binance token. Clean Core Solutions set up a $175 million Dogecoin treasury with the Dogecoin Foundation.
Dogecoins.
Seriously, yep. It shows there's growing differentiation. Companies are making strategic bets on specific altcoin ecosystems too, not just Bitcoin.
Okay, so bringing this all together, our deep dive today really shows Bitcoin is at this critical turning point, doesn't it? Moving beyond pure speculation towards deep integration with global finance, with tech infrastructure. It's digital gold, yes, but it's also the ecosystem being built around it.
Exactly. The regulatory clarity, the TradFi infrastructure being built, that AI convergence in mining, these are all strengthening the market's structural foundations. Now, macro volatility, interest rates, jobs numbers, that's still a near-term risk, for sure.
Right.
But the fundamental security of the network, the growing adoption, that feels like it's taken a permanent step up. The market's really maturing, becoming an integral part of the financial system, not just an alternative.
So maybe a final thought for you listening. Given all these profound shifts we've talked about, how might you reevaluate the role of digital assets? Not just thinking about them as investments, maybe, but as actual fundamental components of the next generation of finance and technology. What assumptions you might have held about crypto might need a serious rethink in light of how fast things are changing right now. Definitely some food for thought.